Ladies and gentlemen, welcome back. This is Christopher Aaron. How are you? It is March 19th, 2020 here, the first day of spring in the Northern Hemisphere, and we are going to look at the world markets with respect to the coronavirus. We will focus on gold, silver, the U.S. stock market, the U.S. bond market, commodities, and oil. We are expanding our coverage here. You're going to see a lot of changes coming to this channel over the next several weeks and months. Why? Because everything is related, and you will see the evidence for that in just a moment. I just wanted to tell you briefly what I'm going to be doing personally over the next couple of weeks. I'm in a major city here right now in the Northeast United States. I'm going to be getting out of here in a few days. I can see the writing on the wall. You know, they're talking about, 4 days ago, we had 2,500 coronavirus cases here in the United States. Today, we have over 10,000. So in 4 days, we have quadrupled. You know, if we want to talk about doublings happening every 1 or 2 days, 2 days from now, we could be talking about 20,000 cases. That's Saturday. Monday, 40,000 cases. Wednesday, 80,000 cases this time next week. When is the exponential growth going to end? I'm pretty portable, pretty mobile these days, so I'm going to be going up to the woods, me and my dog. And we will be filming some videos from the woods, old school style. If you've been with this channel for a while, you know what I'm talking about. Me and him will get out. We'll go to some peaceful and inspiring places where we can put all this craziness into perspective. Hopefully, I'm not thinking that we will avoid the virus per se, because I'm pretty sure it's just going to spread everywhere eventually. I try to keep my immune system healthy. I really encourage you to do that for yourself. I think that's the number one thing. Keep yourself healthy right now above all else. So that's what I'm going to be trying to do up there. But also, really, it's just, I don't see a need if it can be avoided. If you're someone where you can work remotely, I don't see the need to stay in a city where everything's kind of getting crazy, and people are fighting over toilet paper. I'd like to get somewhere where it's a little bit more sane, and to me that means going up to the woods. So anyway, next couple weeks you'll be seeing some videos from the woods. Let's get into where we are right now, as I said, with the coronavirus. So here's the latest update. We're at 222,000 cases worldwide. Where are we? Just under 10,000 deaths. So what is this? This is, 5%, a little less than 5%, 4% or so death rate. It's pretty alarming. I have to say, I was shocked. You could say a month and a half ago, I was not believing that things would get this bad, but here we are. As I said, over 10,000 cases in the United States, and so the question is, when does that exponential growth, we're talking about a doubling in the cases here every 2 days or so, when does that exponential growth start to turn into more of a linear growth? And then from a linear growth, when does that turn into a flat, a plateau in the total number of cases? I think when we start to see that shift from exponential to linear and then approaching a flat case number, then we can project that we are getting close to the hump of this thing, but we're not seeing that yet. It's an alarming time. I do think that most of us, the vast majority of us, are going to make through this okay, barring the economic damage. I think the economic damage is going to be the worst of it. I think we can really take our health into our own hands right now and come out of this fine on the other side as far as the health damage. But let's turn to the economic side of things and just take a look here. What has happened? Now, this was the peak in the U.S. stock market exactly 1 month ago. So I didn't just choose the starting point randomly. This was the all-time high in the U.S. stock market, shown here by blue. And so look at what's happened here. So this has been a 28% decline in the S&P 500. And just take a look. Now remember, the last video that I produced here was on March 3rd. Remember this. I was saying, guys, we are headed for deflation. And if so, certain assets are going to hold up better than other assets. And look at what has happened. So silver has fallen worse than the U.S. stock market. Oil, of course, something unique going on in that we have those price wars going on between Saudi Arabia, OPEC, and Russia. Of course, those price wars would not have started had oil not already been weak from the deflation going into it. So this is not entirely just related to those price wars. They're doing the price wars because they have too much oil and not enough demand. So it's exacerbating it. But, we look at silver, we look at the gold miners basically tracking the U.S. stock market 1-for-1 on the way lower. Same thing with commodities. So just get a look at this whole thing right here, guys, and, think back to a couple weeks ago. Who were the people shouting from the rooftops to buy silver a few weeks ago to protect yourself from this thing? Not me. We were selling our silver miners a couple weeks ago. If you were with us on the premium service, you protected yourself from that decline. I was not recommending to buy silver a few weeks ago. It is lower now. Let's take a look. So gold also lower as a net sum, but not as much as the industrial commodities or the industrial stocks, right? But still lower as a net sum. And then U.S. bonds and U.S. dollar, the fiat paper assets, are holding up the best still. The only things actually in the positive for the last month as a net sum. So, guys, this is deflation, loud and clear. And I know some of you will be saying, well, this is only the paper price of silver and the paper price of gold versus the physical price. And there is some truth to that over the very short term in that we've seen the premiums on these coins skyrocket, the coins and bars, anything under 100-ounce bar, they've skyrocketed. But I will tell you what, I would not be a buyer. If we have spot silver at $12 an ounce right now, I would not be buying silver eagles for $20 or $21 an ounce. You are getting ripped off if you're doing that. And there is a way to buy silver at spot. Unfortunately, you have to be buying 1,000 ounces at a time. You have to take delivery from the COMEX, which is what the dealerships do. And then they refine those ounces down, and they're selling it at a huge premium to you right now. Why? Because the small investors are demanding the product, and there's a temporary shortage. That does not mean that there are shortages worldwide. There's plenty of silver. It's that there's shortages in the mint capacity over the short run. Don't get ripped off. Don't pay $7 or $8 above spot for silver right now. Wait until those prices come down. They will come down. You can mark my words on that. The premiums will come down as the short-term volatility subsides. So we're looking at deflation worldwide. And let's compare this to the crash of 2008 and just look at how things fared. This is the last major crash that we had around the world. Going back to the worst of the crash of 2008. Does this look at all familiar? I mean, look at this, U.S. stocks down 33%, commodities down 46%, silver down more than stocks, oil down, gold miners, even gold lower. And what were the two things to hold up? The U.S. dollar and U.S. bonds. I'm not saying this is how it should be. I agree this is a perversion of what should happen. That people are fleeing and flocking to paper that is being printed out of thin air just because I believe it's an abomination that we use paper that can be printed by the authorities. Just because that might be a belief of mine or of yours does not believe that the majority of the population agrees with you. And you know what can happen if you disagree, if you ignore what the majority is doing, is they can stampede over you and literally wipe you out. So let's go back to the present. Let us go back to where the majority are fleeing and flocking into. It's paper. Gold holding up better presently than other markets. Gold being the longest, oldest store of value. And in deflation, although you get some selling in gold from the commodity-based hedge funds that liquidate all their holdings, whether it's gold or oil or natural gas, they are selling a little bit. Also, you have some forced liquidation going on in the gold market. And then you have some buyers. So you have a mix going on in gold, which is why it's the best performing of the commodity complex, if you will. But still, you have to ask yourself now, when we talk about the coronavirus, where we are, right? And how much of the damage has the market discounted already? Have we discounted the entire thing to come? I don't know if anyone really knows how this is going to play out. Is this just going to play out like some of the other flus that we've had over the last couple of decades? Is this going to be more like on the other extreme, like the bubonic plague, where a third of the population of the world or of Europe, where we had record keeping back then, died? Certainly it's going to be somewhere in between those two extremes. Does anyone really know, though, how bad this is going to get? I don't think anyone really knows. I'm not saying I know, but I know no one on TV knows either. So all we can do is really take a look at how the market is responding here to this deflation, and we can start to ask ourselves some questions. What is a prudent course of action to take to defend ourselves financially, assuming, of course, that you are defending yourself with your health as the number one thing, like I said in the very beginning. But let's look at where we are here with the S&P 500. Now, this is the proxy for the entire U.S. stock market. And let's be honest, the direction the U.S. stock market goes, it had been the best performing in the world over the last 10 years. Where the U.S. stock market goes, the rest of the world is going. And as we saw, where the U.S. stock market goes, silver is going, oil is going, gold is going to an extent right now. Commodities are going, gold miners are going, everything is moving in the same direction. So where are we now? Is this the bottom? Let's take a look at some key levels. I've already drawn in the Fibonacci retracement levels here from the crash of 2009 lows. That's what we're looking at, the key numbers, these ratios that appear in nature that tend to act as support magnets sometimes on the way down. Let's look at some of the other key levels. Let's draw this in here, a bit of an expanding, rising support band that we have here. Notice, so this is from the crash of 2009 bottom, and we're looking at this low in here in 2011, this low in 2016, this low in 2018, all these kind of matching up fairly good within a pretty decent little band here of rising support. So clearly buyers are stepping in at a trend. That's all we're looking at. Where are the buyers stepping in? And now we find ourselves right here. And so this is very interesting. Now, it's tough to see exactly where we are on this because it's been such a steep decline and these candlestick bars are getting very tight in together. So it's hard to actually see the exact point that we are here in the stock market. But look at the number, 2409 today. Let me draw it in with an arrow. So we are right there right now at the red arrow, right below about 100 points, 90 points or so below the lower boundary of this 11-year rising support. Can you see that? We're right over there. This is absolutely earth-shaking critical. What happens here over the next 2 weeks? I'm talking the next 2 weeks. If you want to ask me, the next 2 weeks define the fate of our civilization for the next 6 to 18 months. This is going to tell us how bad things are going to get, at least from an economic standpoint, and there should be a reflection between the economics and the health aspect of things. So I think we're going to have a very good answer as to how bad this is going to get over the next 2 weeks. What we need to see, so we've rebounded from the low. You can see the low here. We've rebounded from the low. The key point is, does the stock market recover this lower rising boundary? If we can recover this, which right now comes at 2,500 on the S&P 500, like I said, we closed at 2409. If we can recover 2,500 by the end of this week or the end of next week, I like to give these long-term trends 2 weeks to show me something decisive. I would need to see 2 weekly closes below the 2,500 level. So we're not even yet at 1 week. Although this looks bad, we could have a recovery tomorrow, and then we could have another bit of a false breakdown the next week and recover still back above 2,500. Now, why am I making such a big deal of this 11-year rising trend? Let's look at the historical example. Okay, this is the same S&P 500 from 2002 to 2008, leading into the global financial crisis. And as we said, this crash was much more significant than what we've seen already. Notice what happens here. When you have a very clear channel that's rising like this, a very clearly defined rising channel that then is broken, it's not that the market typically crashes immediately. What you first have is an initial decline from the breakdown point, followed by a retest of the channel, which should fail in the highest probability, and then you get that crash. And that's what we looked at the very beginning when we looked at how all those different asset classes fell together during that crash. So here's the thing, guys. In this model, we are only right here. We are right at that crash, that breakdown level right now. All we have seen is this in the comparison. Okay, this. We haven't actually seen the crash yet, if it is going to happen. Let's bring it back to the present. Like I said, remember, long term. Now, the thing is, this is an even longer pattern. That was a 6-year pattern that we saw back then leading to the crash of 2008. This is an 11-year pattern, and if this thing breaks, if we get 2 weekly closes here below 2,500, we are going to have something that looks like this, and probably a whole lot lower. This could retrace the entire thing somewhere between the absolute lows and 1,500 here will be the estimate. It'll be a significant further decline to come across stocks, across oil, across silver, across gold miners. If we get that scenario, if we get the false breakdown, and this is going to be decided within the next 2 weeks, this is hard to imagine right now, but this market could hold right here, stabilize, and begin the unexpected rebound amidst the worst of the news. So some people see stuff like this and they say, well, you're saying anything could happen then, so there's no point in doing this analysis. That is not what I'm saying. I'm saying we have a 2-week period here where this market is going to decide. It is going to decide one way or the other based on how these closes come in over the next 2 weeks, plus or minus. We're going to have either a stable market that lasts many, many years here into the future, or if this is like the analogy of like the asteroid coming from outer space that no one could have foreseen, this could lead to something like the crash of 1929 here over the course of the next year or two. And then think about that. Are you properly prepared? Are you buying silver hand over fist to prepare for the asteroid impact when we see evidence that silver will not protect you? We do videos like this. The last one that went out was over 1 hour long, and another one will be coming like this weekend. If you like this kind of analysis, but you want to go further in with gold, with the US dollar, with the key stock market support levels that we are watching here, as well as the gold mining sector and the bond market, make sure you check out Precious Metals Intelligence. That is our premium service. We will be expanding that starting immediately to cover all these markets. Because anyone telling you that these markets are not related, they're just not looking at the evidence. If you would like to speak to me one-on-one, please know that I do individual consultations with investors across the spectrum. There's nothing too big, there's nothing too small that we can't handle here. I simply do independent research. I do not have any precious metals or stocks to sell you, nor bonds, nor cash. What I sell is analysis and research from an independent perspective. So if you're having a hard time finding anyone who may give it to you straight, that's what I'm here for. Make sure to hit the subscribe button, that big red button right below. That way you will stay tuned to all these videos when they come out. And I do want to thank those people who are supporting this channel on Patreon. It means very much to me. We're here in this together, guys. Like I said, I'm going to be getting out of the city here within the next couple of days and heading up to the woods. I will see you guys, myself and my dog, we'll see you from there over the next couple of weeks. We'll update this as often as possible. Take care of yourself. Take care of your health, your loved ones, absolutely foremost. You know, if none of us make it out of this alive, there's no good in having all the investments in the world. So we need to make it through this together. I think that's something that I'm going to be focusing on more myself and trying to encourage you guys to do. And then when we have that secure, we can make sure that our finances are also properly balanced. I'll see you soon.